love the channel and find it useful in becoming a happy retiree. Subscribe today. What's happening in the world here? So number one, we've got these, we know, we've heard all week about the trade tensions between the U.S. and China, our biggest frenemy economically, geopolitically. So we say, hey, we're going to do $60 billion now in tariffs. And this is after, last week we talked about steel and aluminum tariffs. Now it's $60 billion, or 2 weeks ago. Now this week it's $60 billion in just tariffs in general on Chinese goods. China says in response to that, hey, you know what? You say tax, or basically a tariff or a tax on our goods. We're going to do the same to your goods. So now $3 billion on U.S. goods. We've now interjected a new element of uncertainty to these markets. This is new, this is a new problem to work through. This thought of tariffs imposed by our government and their government that can just be instilled in a pen stroke without a vote. That's something that is we have not had to deal with this for decades. This is new. This is, for the most part, this is new. And stocks don't like it. Stocks do not like the whole new ball of uncertainty. Down over 700 points on Thursday, down over 400 points on Friday. The market hates this kind of stuff. And now we're back into correction territory for the Dow. Very close, again, for the S&P 500. And that, when I say correction, I mean the 10% level. Not to mention the first real backlash against Facebook. So tech, totally separate, tech under pressure as well. And, oh, by the way, another rate hike and a Fed, or a Federal Reserve, talking about how strong, again, ironically, how strong the economy is, which could mean even more rate hikes, which, again, would work against a strong economy. So the question is, does it stop here? Do we see more issues with trade? And how does this back and forth between Trump and Xi Jinping, what's this back and forth mean? Is it going to go to an all-out trade war? I mean, that's really what the market's scared about. And then does Facebook go? I mean, this is the first real battle that Facebook has had to fight. Do they go the way of MySpace? Remember, MySpace was just on fire. Everybody on MySpace, millions of people using it. And then you turn around 6 months later, it's basically irrelevant. Could that happen here? And then does the Fed choke off the economy with higher interest rates? So these are some tough questions. These are tough questions to answer. In the end, I think this could be a turning point for some of these issues. Not all of them. Others that I just mentioned, I don't think will end up being a dagger for this market or for this economy. So the top three issues facing this market we'll cover today here. We'll continue to talk about this. Making you nervous, making Wall Street nervous. 1, the Fed. 2, Facebook. And 3, fight over trade. And we will take these today here on Money Matters, because there's something not great with the stock market this week. And that's exactly what we're coming off of, a negative 6% week. Really the worst week since the very beginning of 2016. So we've had some real volatility in markets. So much of this has to do with tariffs and the worry that the tariff tit for tat, back forth, turns into a trade war, as opposed to this kind of surface conversation, surface fight so far. If you think about it, $3 billion, the reaction. So we say 60 billion. They say on Chinese goods, they say 3 billion on U.S. goods. I mean, think about the real nominal, the nominal amount here is just tiny. You know, if you think about $3 billion, you get a tax of 15 to 20%. You're talking about $500 million bucks, which is just nothing in these $20 trillion and our $20 trillion global U.S. That's just the U.S. Our $20 trillion GDP. China's not that far behind us. So these are tiny, tiny numbers around the margin. We're talking about 0.001% of GDP. So not a big deal on the surface. The question is, does it escalate? Does it go, it becomes some sort of real fight? And that's what we're kind of talking through today. The risks to this market. Number one, the Fed raising rates. Number two, Facebook that we'll get to. And number three, the fear of a trade war or the fear of tariffs. We've been discussing trade, these tariffs. Do we get into a trade war? Does that ruin the U.S. economy, ruin the U.S. stock market? Listen, it's something to keep an eye on because I don't think it escalates significantly from here. I think a lot of what's happening is symbolic, but this is a tough one to figure out. This is not something that is black and white. There's a lot of gray between where we are and where we could go or could fizzle from here and not get any more punitive. We're just going to have to keep a very close or sharp eye on that. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.